Hello traders, welcome to the Wednesday trade recap and forecast. So prior file was corrupted, so I had to refilm this, but that's okay. So this is the euro and the US dollar. Basically what I was seeing in the prior price action, well, I was seeing a nice push up, sort of an ascending structure, then a breakup of the structure. We broke the high, retraced, broke the low, retraced, and then we continued moving to the upside. There was an opportunity to enter on a long trade right about here. So let's see how the price developed. Basically, what we got is we got the pullback. At this point, I was happy to take a flag. I saw no momentum shift. And then right here in this candle, I saw a clear momentum shift. So let's see how big the candle is. Definitely it is bigger or as big as the impulse candles, showing me a shift. It is Monday, so we have two warning signs. Basically, first warning sign, it is Monday. Usually Mondays are predominantly range bound days. Second one, this candle is almost as big or bigger than the impulse candles, showing me a momentum shift. Momentum shift signals to me a range, and Monday also signals to me a range, and that's exactly what we got. If I was in this, I would have been stopped out with my 12 pip stop loss, so it would have been a 1% loss, and we got that range that we were expecting. At this point, I'm seeing liquidity area above and below the range. I'm waiting for the break of the high or a break of the low, but the break needs to be big, of course. Then an entry pattern, so either to the upside or to the downside. Again, the break needs to be big. It needs to clear the liquidity area. EJ, Euro Japanese yen, is looking very, very good. I really like this ascending structure. So prior to that, let's analyze the prior price action. What happened? Well, we got a push up, break of the high, break of the low, so break of the structure, and then we started ascending. This ascending is looking very, very clean. What do I mean by a clean ascending structure? Well, we are breaking the highs and leaving wicks, retracing with wicks, breaking by only a few pips, as you can see right here. So when I see that, that is high probability for the price to reverse to a downside. What is the methodology behind this? Well, we know that the retail traders are searching for a top. They're selling the top here, selling the top here, selling the top here, selling, selling, selling. They're getting stopped out every single time. And right here also, when you see a huge wick, usually there is a liquidity area above. That's what my mentor was talking about a couple of weeks ago. So basically, when you see a huge wick like this, liquidity area above, and of course, usually retail traders sell on this candle, and usually the market makers then stop them out and reverse the price. What am I looking for at this point? I'm definitely interested to sell right here, but I need evidence. I need confirmation. I need a nice push down, and then I would sell on the retest of the low, or I need a trend to start to a downside, and then I would sell on a nice continuation or on a nice flag, of course, right here with a 12 pip stop loss, as always. I'm definitely interested in selling this pair. This pair looks much better than any other. This is definitely on my watch list, and I believe it should be on your watch list too. So let's see how the price will develop. We can also get a push up, then a flag or a break and retest. On the euro pairs, that is a possibility. So we can get a very clean ascending or descending channel, and then for the price to impulse in the same direction. If that happens, I will be looking to buy, but I need to see evidence. I need to see a large push to the upside, or a large push to a large push to the upside, or I need to see a reversal. Moving on, AU, forgot to discuss one trade right here. So this was a flag. It happened on a Thursday. I did not enter it. Basically, the only thing going for it, prior price action was pretty crappy, but the only thing going for this was the large impulse down. Then the flag formed, For me, there was a clear momentum shift right here in this candle, and I decided to stay out. If we compare the size of this candle to the impulse, we can see it's kind of either the same size or bigger. For me personally, it's definitely showing me a momentum shift, and I do not like how it formed, and I do not like the price action where it came from. So it came from kind of range bound crappy price action. There was no high probability pattern prior to it. There was no established trend prior to it. So the only thing, as I said, going for it is this impulse down. So yeah, I didn't take it. Something for you to learn. It would have been a 1% loss. So go ahead and backtest momentum shifts on the Aussie and US dollars, see how they play out. It took me a long time to notice these momentum shifts. So yeah, it's definitely a work in progress and it's not easy. I still sometimes struggle with it. So don't get discouraged if it takes a bit of time to learn. Now we have an ascending going into a descending structure, then into another ascending. What do I expect to happen? I expect to see a larger range, and that's why this pair is not currently on my watch list. This pair is, I would say, range bound, sleepy. As a trend trader, I'm staying away from it. What I'm looking for, large impulse up, flag, or a break and retest, or I'm looking for a large impulse down, then a flag or a break and retest for the price to move away from the current range. That's about it for AU, nothing more to say really. AJ, if you were looking for a flag here, I would say it was a bad flag because we got a large wick on the top and we got a momentum shift in the aggressive retrace. Look at the size of the retrace, it's definitely showing me momentum to downside, and it's definitely showing me that the sellers have stepped in. After I see a large wick and an aggressive retrace, I'm staying out of any sort of trades. Then what happened? We formed sort of a V, and then we descended, and then we are starting to ascend. So I would say this is the same as the Aussie and the US dollar. I'm expecting a larger range right here. What I'm looking for is for the price to move away. I'm looking for a large impulse up, or I'm looking for a large impulse to the downside like this. That's about it for AJ. I mean, it's stuck in a range right here. Prior price action was also stuck in a range right here. The only thing that was good here was an impulse up. It ended with a wick and aggressive retrace. So yeah, pretty bad price action. Pound, opportunity to sell here on a reversal. I did not look for anything here because on the pound, I'm only looking for a trend and then a continuation trade. I'm definitely not looking for any reversal trades. So I did not even look at this sort of area. Then what happened? Well, we got an ascending going into a descending, now in a flat range. So I would say it's looking the same as AU, it's looking the same as AJ, and that is pretty range bound. I want to see a large impulse up, a flag or a break and retest, or I want to see a nice large impulse down, a flag or a break and retest. I just want to see price move away from the current range bound structure. So moving on, NJ, is it a bit more interesting? It's not, unfortunately. We're stuck between the low. The most recent low is here, most recent high is here on the top. So we are stuck in this general area. We got a V reversal, and that's exactly why we are now ranging. Usually after a large V, we get a large range. As a trend trader, this is a very bad warning sign. What they want to be seeing is a large impulse up or a large impulse down. The only thing that can form out of this price action is possibly we have a V, we have a range. Usually price starts to trend to a downside. If we get a downtrend, I will be very interested. But again, I don't really see that happening very soon. I'm expecting a larger range, to be honest, because the pair is just very wicky all over the place. So yeah, not really a good sign. If it pushes up, I will look to buy. What I'm waiting for, of course, is a break of the high, break of the low, watch out for the liquidity areas. So the traders that are trading the range on the lower time frames, they are selling tops right here, they are buying the bottoms, and usually they keep their stops somewhere around these areas. So these are liquidity areas full of stops, full of nice juicy liquidity. Market makers love liquidity, so they usually tap into it, reverse, or they tap into it, they break the high right here, and then they reverse and start trending in the opposite direction. Of course, we want to follow the market makers. We want to be doing the exact opposite of the retail traders. So let's follow the market makers. Let's wait for evidence that they are in the markets. Let's wait for our large impulses. The only thing on my watch list right now is, of course, the euro and the Japanese yen. If we get a nice large push right here with a nice clean close, I will be looking to buy, because I know that on the EJ pair, usually we can get a push up after an ascending. Usually it's very high probability if we get a nice push. So if we get a nice large push, I will be looking to buy. That's about it for a trade recap and forecast. Don't take my advice blindly. You need to be back testing these sort of setups. Just because I'm looking for a buy, if we get a nice push here, doesn't mean you should be looking for a buy too. You should always research the setups in advance and then have your own trading plan. That's it. Good luck with your trading. See you guys in the next video. And I would say be a bit more patient with every pair except EJ. That's it. See you guys in the next one.